again, all that is being said, just that you know that this is a resource that is at your disposal. And again, we are more than 24 partners that serve that sector directly. I'm one of them, but all the partners, all the teams are very much experienced in the domain, and that's the main purpose of being here and carrying that message on behalf of the team. Let's see if it will work. There is.
Good.
I don't know. It didn't work.
All right.
Never mind.
Okay.
Never mind. Was a bit about taxes. So the way we see the industry from our perspective is that there are specifics in the industry domains, and I think as a entrepreneur, you have to be I would say the main lesson that I've learned during the over 20 years of serving startups is that the trend is your friend. Okay, part of my as on a personal level, my brother is an entrepreneur in the I would call it the space industry, the satellite connectivity sector, and we've been working obviously is my brother, so I've been working on a pro bono basis, I would say, with him for over 20 years. And I think the main struggle was that along those years, there was no, the trend was not in our favor. Okay, there were no VC that are focused on that domain. There were no financial resources to support the venture, and that is a big struggle. I think that the era right now is really at your favor to establish a company in this industry, because eventually, even if you have the brightest idea or the greatest technology, you have to have the resources to carry that forward. And I think that is the main lesson that I learned, is that the friend is your friend. You have to have the right support, you have to have the right funding, and I think that's the right time. And this is why we are focused on that industry right now as well. I've been for the last 5 or 6 years, when I understood that the vertical focused experience is an advantage. I started that in the fintech sector, and I'm leading the fintech sector, blockchain, crypto, all that stuff, and gaining the expertise and the ecosystem around you is very, very important. And I think that we are starting to see the same with respect to the space sector. So I think that's a really important lesson. And I think that as an entrepreneur, you have to understand the ecosystem very, very well. Okay, you have to understand who are the key stakeholders. You have to understand what are the right funding path that you have, who will be your supporters, and what are the challenges on the financial level. Because even if you have, as I said, the brightest technology, team, etc., it won't fly. Okay, it won't get to space. So I think that's the main takeaway here. I think that there are so many questions in having a new industry. For example, if we take it into our world, does the and I'll touch on it in a moment. Think about it. Offshore, onshore taxation. Have you ever heard? So there are questions about what would be the regulation, what would be the taxation, what would be how do you carry a physical count at space? Okay, just for example. So I think there are many questions, and that is why we are so curious and so enthusiastic about it. And Erez joined us through Zoom, but he helps me to carry that forward. So just a little bit about the journey of a typical Israeli startup. I think that most of you, and again, I'd rather have this as a conversation. So if you have any question, just feel free. Okay. So that is what I gathered. That if I'm wrong, just think about it. I think that most of you are probably around here, just before establishment of the company, before seed funding, and there are so many questions. Most of them, if you keep it simple, it will be simple. If you get things complicated, so the infrastructure of the company will be just it's like writing a check that we have to settle in the future years. So your cap table, okay? How is your cap table? How does the cap table look like? Who are the partners? Do you have founders agreement? Okay. Do you have reverse vesting if someone gives the company? What do you do in that case? Which company to establish? Whether it's an Israeli company, a US company, other sort of company. Okay. Where will the funding will come from? Okay. The pre-seed funding or seed funding. Again, as I said, you have to understand what are the resources that you can reach out and grab. Otherwise, it's going to be a much lengthy and much more harder journey. And most startups right now, if I judge it by the startup that we see, I think that the thing is right now is speed over efficiency. If you are able to raise significant funding at the early stage, okay, so you have the competitive advantage. If not, I would say you're almost doomed, okay, because there's someone else, probably in the West Coast or someone else or somewhere else that already raised significant funding and is already building the same or similar model, and the funding is a significant part here. I just, we were used to see or to deal with a seed funding of $1 million for Israeli companies, right? Now it grew up to $4 million or $5 million. And I just had a call yesterday with one of my clients who raised the seed funding of $100 million. Okay, so seed. Okay, so if your goal is to build something big and you have to do it fast, so this is an outlier, right? But again, you have to be focused and understand how your business model, the product that you're building, the technology that you're building, you have to make sure that you have the right support. And I'm not saying I saw along the way bootstrap companies that done great, okay, that did great, okay. But again, in terms of funding, I think it's really important.
But you're saying that they have an offer for a smaller amount than I think about. You're saying, take a breath.
Take a breath. Think, consult. Think about it. You have to have the right funding. Okay, you can have a smaller check that will bring you to a significant milestone then you can leverage to a greater. But for example, nowadays you can't dilute yourself. Say you're taking $1 million for 25% of your company. It won't work. Okay, I don't think it will work, because the next investor will come in and say, you're the diluted already, probably 2 or 3 founders. Okay, I have to put the fuel into the tank. Okay, and that's to carry this ship, for the next year or so, and then someone else will, and I'm going to pay as the new investor. I'm going to pay that dilution because the founders need to be there to push forward. And again, this industry specifically, it is in the very early beginning of it. Okay, so you have to consider that. Okay, and there might be not there's no funding available, and you have to do that bootstrap or with smaller funds, but you have to raise enough money to move fast. Okay, and to get to a significant milestone. Otherwise, you're basically doomed. And again, when you're competing with with the other companies that they raise significant amount of money, you have to recruit, you have to build the technology, you have to market yourself, and there's so many things to do. But again, that is the atmosphere. I think that again, this space specifically is still in early stages. So the funds, the VC, the industry-focused VCs that I've met so far, again, they're smaller in their size, and they are more fit to seed funding that for smaller checks again, but it will grow with the company. And you have to have that in mind. Sure.
When you said about funding,
Yeah.
You said that you need to raise about 5 million. So is it dollar or shekel?
First, dollar. Thank you for the comment. Again, you can net pre-seed funding, okay, lower than that, but that is the competition. Right? So, and you have to understand the because someone will just, was nice, guided, and a great team of entrepreneurs, okay, that know how to sell that idea. We come 2 weeks, 2 months after year, and raise significant amount of funding, and just be the winner of the category. You see that they leave aside the cybersecurity, but there's only one winner eventually, and that is what the VCs are looking for. Okay, for a company that could be a winner of this category. Okay, that could be the monopoly, by all means. And in that space, that's how the VC normally think about the investment. So they will say no to 800 meetings they have during the year, but they say yes to the call that they can the monopoly. And for that, you have to have the right resources. Again, there are many sorts of funding alternatives or resources. At this very early stage, you have to know things like Tnufa, which it's basically governmental subsidy here for Israeli companies that can help you with the proof of concept. It's a very small check, but again, for proof of concept, proof of the idea, I would say it's about 50,000 US dollar, something of that nature. You have matching funding from the Israeli government, again, from the innovation center. Take for example my brother's venture. Okay, so again, space is something that is very strategic in the mind of the Israeli government, and the hotbed for establishing new ventures around that. Same as with cybersecurity, because the IDF and the governmental support for it. So we were able to raise funding from the government, but that is a matching funding. You have to bring the investors to tag along with it. But that is something that I believe for ventures, for Israeli venture in the space industry, that would be significant resource of funding. So it's the Israeli Innovation Authority or the Madan Rashi. Okay, just keep that in mind. And maybe, and it's something we might have.
They have a lecture later on this week with someone from the Innovation Authority.
Okay, so perfect. But remember, that is a matching funding. It's great to have that because it provides a sort of a proof, okay, for the investor that the technology is innovative enough, and that it's strategically interesting, and that can attract investors. But again, it's just matching where to establish a company. Okay, it's important question. I guess that most of you reside here in Israel, but again, there's the question, just at a high level, an Israeli company is very tax efficient. Okay, so most of the ventures, I would say 80% or 90% of the ventures that I meet with eventually ends up as an Israeli parent company. Okay, because it is very, very efficient in terms of taxation. It's very lucrative nowadays in terms of investors. And I've sat with the chief analyst of Bank of America, and he said there was thought that there's a discount for the Israeli companies when you end up in the US capital market. But he compared the CyberArk with the Palo Alto networks and so on. So, and they basically proved us wrong that there's no discount, and Israeli companies are having the right valuation, so there's no discount. But the other thing is that you might have, back to my starting words, you might not have the right supporters here, right? Investors that are still not focused on this industry. So you may be able to raise your early stage funding from US investors, for example, because the trend there is, I would say, 2 to 3 years ahead of us. Okay, and they may say, you know what, I can't, Israeli company, what, I don't understand that. So we might end up with a US company, but again, that's a mainstream. Either an Israeli company or a US company is a top is a very mainstream. And again, it's not, we have 20 floors at the EY Midtown built on advising of this. But again, it's not a deal breaker. Okay, for a startup, you have to move fast, you have to take decisions, and it's not something to make or break. Okay, so There are advantages and disadvantages to both, but again, you have to understand I would say it's a 15-minute discussion to decide on that. Just take that advice. Yeah.
What do you think about the recent collaboration between Israel and the Emirates? Is it smart to make a company? Like, what are the advantages, disadvantages? What do you see? It's new, so it's not.
Yeah, it's new, and again, I would say that long term, okay, in terms of the structure of the company, I would still build it the old-fashioned way, either as an Israeli company or US company, okay, or elsewhere, UK and so on, to keep your options open, okay, because we just don't know what would be the next funding and where it will come from and what will be our challenges, and we plan, but once you execute it, you may need to shift. But in terms of funding, I see that more and more, and I think there's a good collaboration there. I've seen, there's the promise and there's the reality, but I think we are gaining momentum there. Again, they are invested in, most of the or all of the most lucrative VCs, the largest ones, and so they are very well advanced on these matters, and I don't think we need to build something very. I will not build something unique for that, just because the next funding will probably come. We have to have something that is fundable. Remember, you have to be fundable. That's the main thing. As a CEO of a company, you have to be, to take care of funding, talent, and customers. That's the three things, and funding is the basis for all the rest.
And about the company structure,
Yeah.
Once you got your first funding, and then you understand you need to shift the company structure in order to get the next funding.
Yeah.
Something that is possible, or
Yeah, so that's a great question, and thank you for that, because I didn't mention it before. Okay, if you structure it as an Israeli company, okay, you can flip that to a US company on top quite easily, okay, because the rules nowadays are changed, and it's much easier to what we call it a flip. Okay, so you can take an Israeli company and put a US company on top of it, or another company on top of it. To your question, okay. So it keeps the flexibility, and we can change it along the way. If we structure it to begin with as a US company, there's the thing that once you're a US, you're always subject. You will always be subject to a US taxation. So the other way around is basically impossible. Okay. So if we don't know, we can start with an Israeli company, okay, and keep that as a flexible option, and be there a lot, okay, because sometimes the US investors, for example, okay, they can invest in an Israeli company, but they have a side pocket for it, and most of their funds are allocated to US ventures. So they don't want to spend it if you can change yourself. Okay, so we do that a lot, and again, it's not so painful as it used to be. It's a matter of process and some cost, but nothing that will hold you, hold your brakes, or that you can or should be, very worried about. I've seen, and that's worth mentioning. I've just read, I'm very much into this blockchain and crypto and also but there's a lot of mainstream ventures that now look at the token issuance. For example, one of the I've read the convertible note agreement of one of the largest accelerators, which basically they invest in mainstream companies, but one of the items in that convertible note is token issuance. Okay, because the alternative funding and for innovative ventures, I would say to a greater extent, token issuance is something that my belief is that will be more and more mainstream down the road. So just need to keep that in mind. Other items. Any questions so far? Yeah. Again.
How do companies, startup companies, to receive fundraising?
I have a question.
Yeah. So just to answer that. Again.
So
Basically, just there's another question here, so let me address that and answer yours as well. So basically, you can't keep everything to yourself, right? If you're in a very early stage, okay, and you're not sure about the valuation, or you're not sure that you can yourself. So there are other means, convertible note or safe agreement, okay, which basically says it's like a loan, okay. But it says we set the valuation later on. Okay, so you provide the early stage investor with some benefit, like a discount from the next round, or you set it. Valuation that is greater than 1 million, they will put their money in terms of 1 million of valuation. Touch on that, the token, for example, okay, is something that is not dilutive. Okay, it doesn't touch the equity of the company. Okay, it basically serves most of the tokens are utility sort of tokens, so we can provide some sort of a discount for each service. Okay, but again, that's not the mainstream right now. It's just it's the only means of non-dilutive funding that I know. Leave aside the governmental subsidies such as the Innovation Authority, which basically is a non-dilutive funding. Okay, there's a cost to it eventually because you have to repay it, and when you exit, you have to pay some sort of penalty. But again, that's non-dilutive. So, for example, if you raise $2 million and then you leverage that by another $1 million from the Innovation Authority, that is a non-dilutive funding, okay, which can provide you more, few months of operation in evaluation and go to the next round without diluting it. Yeah, you had a question? Sorry. Questions? No, Zoom. Okay.
Yes, excuse me.
Sure.
Regarding at the first stages, many entrepreneurs, when they come to, let's say, Ernest & Young, and any accountant or any financial advisor,
Mm-hmm.
and they don't have the financial background,
Mm-hmm.
they come to a place where they don't know exactly how much to ask for the percentage, and the evaluation is both. for themselves and for the talents they have and so on. So I believe there is a kind of standardized and fair kind of percentage that can be given, or at least a kind of a framework, if you can give us.
Okay, so spot on. Okay, there's basically, first of all, when you come to that point, okay, first of all, feel free to reach out, but consult around you with other entrepreneurs, with friends, venture capitalists, and do some meetings that that will give you the flavor of where you are. But basically, okay, each financing round is about 20-25% of dilution. Okay, think about it, and you have to foresee where you are going to end up. Okay, but the benchmark is around 20-25%. Most of the investors would also ask you to allocate for ESOP, for the options holders, for future grants to employees. Okay, so on the fully diluted, it's even more in the early stage. Okay, could be even more, and that's why you need to take significant amount. Otherwise, if you're not able to take significant amount for it, then you have the alternatives of a safe agreement, as I mentioned before, a convertible note, okay, or take a smaller funding, okay, until you get to a point where you can raise, your valuation has increased, and you can you can leverage that. But just as a rule of thumb, it's around 20-25%. Sometimes, when you get to nowadays, when you get to a B round, it's you sell in secondary. The entrepreneurs and early stage investors sell some of their stakeholding in secondary transactions. But that is the ballpark. Okay, again, there are comparables. Okay, I would say that the median and there's the statistics. it's an ever increasing graph, but I would say what I see right now is $4 to $5 million for a 20-month valuation of 10, 12, 17 for great teams. What I mentioned is the outlier, but again, it's increasing. Remember, even the investor that put in $100 million, $20 million, and that just what I saw recently, they are not so they are not out of their minds, because they say, you know what, I put that bet in. There's a great team here. Okay, if they will be able to increase their valuation by the next round, so I was right. Okay, but if I was wrong, they won't increase the valuation. Okay, and they'll put in another check on the same valuation or even lower, and the ones who will be diluted are the entrepreneurs, right? So they are not out of their minds. They're just putting bigger bets, okay, on the right ventures, and maybe skip one or two rounds of financing to get the faster pace. So again, as I said, I can't cover everything. I just wanted to give you a little bit of a framework or orientation, if you may. Nitzan, we have more time, or
we need to wrap up. There
Wrap
are some questions in the chat. Maybe you can refer to those
okay.
rather quickly. So first question is, what is the average seed amount for startup in the space industry? There's another one, which country is the leaders in the space startup ecosystem, if you can say?
Yeah, so let's see. So first of all, we're going to send you some statistics, okay, we gathered. Okay, so Nitzan, you may
If you send
okay,
it to me, I'll
I'll send it over.
convey.
I would say again, if you follow the trend, and we're gonna send it over. Okay, so it's a very good question, and we have the answer. Okay. Again, it really depends on what are you going to build. If it's an infrastructure, if it's a software or hardware company. Okay, it really depends on where you are in the ecosystem. Okay, if it's an application, whether you basically build the industry. Okay, so I would say that to build the infrastructure, you need a much bigger bet. Okay, and you need much more in terms of funding. Okay, take for example SpaceX and this type of ventures. But if you're building an application or a software solution or a cyber solution, then you can be much, it could be lean and faster. Okay, so it really depends on what are you going to build. But again, the US is the leader of the pack. Okay, because it's, what you see around you is that creates the ecosystem. Okay, so they basically put the infrastructure for the I would say the space travel and so on. I think that they're a very good startup here for in terms of cybersecurity, communication. So we can be a factor here. Okay, same as we are in the cybersecurity, and to see this, this room is for me it's mind blowing because I've been part of such venture for many years, and we sort of we felt lonely. So I'm going to provide that information. But again, this seed funding for, I would say, application software, it's about $5 to $4 million US dollar. Okay. What is the next one?
Okay, I think that's it. Other questions, maybe they can contact you later. Sorry?
How do you talk to them? Do you see investor about how to will make software?
So
There's no difference.
traditionally, the focus is on software. It's a shorter cycle. Okay, to get to think about it as an investor. Eventually, you manage your risk as well. So software company tend to get to the market much faster, and then you can test your product market fit and commercialization and so on. But again, to take a look at the automotive industry, for example, most of the bigger startups there are focused on not only on software but also on hardware. So I think that to dominate the market eventually, venture capitalists that invest in the space industry will need to invest also in the infrastructure and the hardware. But judging that by the 20 years of experience, most of the ventures will be around the software, and some will be on the hardware, and the hardware will have maybe more funding in terms of each round, but less less alternatives.
Now I thought you can't scale up like
Exactly.
the first to scale up is when you know to use somebody else's hardware. For example, if there is 1,000 satellites in the sky, you just need to apply software there, then you
Exactly. That's how most of the VCs think about it, right? I was hospitalized 4 years ago, and I was thinking to myself, wow, we were investing in so many features of SaaS solutions which don't add any value to this world. We need to invest in the cure for the most of the in life sciences, right? But the cycle is 15 years, and in software you can within two years you can exit. So what would you invest in if you're a young VC partner? Okay, that eventually will drive the industry.
One more question. Cash cow is which one is the easiest to use?
Most of if you take
Maybe for long-term cash cow, the return on investment per schedule is slow time, lower, but it gives you a cash cow for long term.
Definitely most of the startup, if you scale, okay, and if it works, you're going to reinvest and take more funding and invest in growth. Okay, you have to have a supportable business model, something that can be very profitable, either for yourself or for someone who will acquire you down the road. Okay, so broadly speaking, most of the growth companies are losing money, but they do so in order to gain that market grab that I talked about, to be the so-called monopoly in their domain. Okay, so there, most of them, and I said few words about taxation. Most of the companies lose money. Okay, so there are some tax inefficiencies, but there's no taxes there. Okay, and I give aside, trading machines and all those stuff, which it's not amazing.
Okay. No, actually, we're running late, and Naomi is here, and she would like to start her session as well. But we will give contact information of Eli, so we may contact him even later. So there's no problem. Naomi, good morning. You may come here. Eli, this is for you. Thank you for joining us.
Okay, thank you.
I'll take a picture.
Thank you so much.
Thank you, Eli, for attending. Naomi, if you would like to connect your laptop, and Inbal, would you like to say a few words before?
Hi, everyone. I'm here. How are you? 3 things I need from you. So watch the trailer. When you come there, this will be all I got. Make sure you turn the mask on, okay? There is COVID, it's very sensitive. We see it all. Yesterday, on to be going on. So wear mask, if you drink water, okay? Okay. And last thing, all the cups, just take it with you when you leave